nächsten Interview habe ich Bill Sheriff. Er ist Chairman and CEO von Golden Predator im Interview. Hello, Bill.
Hi, how are you?
Hi. How are you today?
I'm well. Very busy day.
What is the principal focus of your company?
Well, Golden Predator is designed to be the leading gold explorer and producer in the Yukon. We see ourselves emerging over the course of the next 5 to 7 years as a leading mid-tier gold producer based entirely in the Yukon.
Okay. Your assets are in the Yukon area. Is it easy or hard to get in and out to the project?
Well, the Yukon has limited infrastructure. It's growing. It's obviously a newly opened area. We do have 5 of our 6 leading projects that are road accessible, however, because we've made a major effort to get road accessible projects.
Yeah. Mm-hmm. So, could you work the year round?
We do work year round. We do work year round. We're the only Yukon company that is working year round at the moment.
Okay.
And we did so last year as well. This is our second year of full year operation.
That sounds good. So let's talk a little bit about the management. Would you give us a sense of history of the management?
Most of the directors of this company actually have their background, along with myself, going back to Energy Metals, which was a very successful uranium company. Mm-hmm. We started in Vancouver and ended up on the New York Stock Exchange, sold out for $1.8 billion after 3 years. This company was a subsidiary of that. I personally have a background in as a geologist, graduate geologist, but I also spent a number of years as a market maker and a securities broker, so I have a bit of both sides of the industry.
Okay. So could you please give us a brief summary of your existing operations?
Yes, we have over 1.5 million acres in the Yukon under various levels of development, all the way from grassroots, which is a very large portion of the property, but a very small part of our company's focus. But it provides properties for the future. And then we have a handful of 5 or 6 projects that are pipeline projects that have been drilled to a certain degree, have very good indications. We're developing resources on 2 or 3 of them, moving them towards production for the 4 to 5 year time frame. But most of our efforts are going into Brewery Creek, which is the former producer, operated between 1996 and 2002 as an open pit heap leach. We're still in possession of permits there, so we can resume operations very early there, and in fact we will do so during 2013.
Okay, so do you have a 43-101 resource for this project?
We have a 43-101 resource that's currently being done by Tetra Tech. It'll be out in April.
Okay.
And right now we're doing our plans to reactivate based on the historic resources, which are quite conservative.
Yeah.
And the 43-101 will be well in excess of the historic resources. Even that 43-101 will only be an interim, because we'll be doing we did 55,000 meters of drilling last year on this project, and we'll do a similar amount this year.
Okay.
So the 43-101, by the time you read it, will already be out of date.
Okay. So you are going then through the whole process to the preliminary economic assessment and pre-feasibility or feasibility, or do you go straight in production?
We're going straight into production with an internal feasibility study on the first phase. And the first phase, we're able to do that because it is simply fulfilling the second half of a mine plan that was originated by Viceroy back in the 1996 to 2002 timeframe. All the parameters were established. We've gone through and re-engineered these, checked them, have outside consultants that do essentially a feasibility study, but it won't be full-blown and it won't be published. Simple fact of the matter is we have only $16 million in CapEx needs because it's a restart.
Okay.
We already have the parameters from 6 years of operation, so we don't need to do predictive studies.
Yeah.
We actually have case histories, all the data is present, all of the information is complete and whole. What we will do is a second phase, which we're already starting permitting on, will be a much larger leach pad in a different area of the property, the south central area, as opposed to the old area that's already developed. This will entail a full feasibility study. It will entail a brand new permitting regime, and we won't see that into production until the end of 2014. Okay.
How much ounces of gold do you expect to produce?
It's a bit sketchy now, but if we can come up with, on the phase 2, the much bigger one, assuming we come up with a 1 million ounce open pit resource by the end of this summer's drilling, not in the first 43-101, but in the second one to be done in the 3rd or 4th quarter of 2012, then we'll be looking at something in the order of 130,000 ounce a year production rate.
Okay.
Which would give us a CapEx for phase 2 of something in the $100 to $140 million range. Here again, those numbers will get tightened up as we progress through the year's drilling, and we know exactly how much we have.
Yeah.
Phase 1 with a reduced CapEx of only $16 million. I think it's probably the lowest CapEx project in the business now.
Yeah.
It'll see incremental production starting at about 20,000 ounces a year, going up to 40 or 50,000 ounces a year. And here again, it's dependent upon the actual resources, but There's 150 to 180,000 ounces based on historic information of gold remaining in the leach pad that we will reactivate.
Yep.
Plus we have the potential to add another 5.5 million tons of freshly mined ore from the historic resources onto the pad. And based on historic metallurgical recoveries, plus we've verified that with current testing, we can come up looking at something at that sort of profile.
Okay. So do you have an idea about the CapEx or the OpEx costs?
Yeah, our cash cost per ounce on the leach pad restart will be fairly modest, something in the order of $500 an ounce.
Okay.
The newly mined ore will be considerably higher, something in the $700 to $780 range.
Okay.
Here again, with the current gold prices, that's quite a healthy margin.
Yes, that's a good margin today. What is happening today on the ground?
Right now on the ground we're drilling.
Okay.
We're doing exploration. Once the snow, it's still quite cold there. Once the snow is cleared to a certain level, then we'll start clearing ground and in fact stripping the old leach pad and crushing it and restacking it in preparation for commencing leach operations next year.
Okay. So do you expect the next press releases in the next few weeks or so?
We put out about 40 or 50 press releases a year.
Okay.
I mean, we're quite active with the amount of drilling we've done. I think we've already put out 6 and it's in March. So,
okay.
Our investors, I think the longest they've waited is 4 to 5 weeks for news at any point in our history. There might have been a time or two that was more, but we're very good about communicating with our shareholders, and we're quite a dynamic company working on a number of fronts.
Okay, so you have several projects in the Yukon area.
We do.
Are you looking for another project?
No, our plate's quite full. That being said, that if there's a superior project that comes along, we'd certainly investigate moving forward with it at the expense of one of our current ones. But we've spent a number of years carefully developing this portfolio of properties. We're one of the first ones to move into the Yukon, and we spent, like I say, a great deal of thought going after projects that have good infrastructure so that we will be able to do something with them at a reasonable cost, as opposed to many of the projects in the Yukon that are helicopter accessible and very, very expensive and limited to seasonal work. Our projects are not limited to seasonal work. And so we're quite happy with our projects, but we will be doing most of our work this year on Brewery Creek because, quite frankly, in the current market environment, cash flow is a very, very good prize for us. We've got a very unique situation with a brownfields permitted site, low capex to regain some cash flow. So that's what the company's focus will clearly be on.
So you told me you have some royalty assets too?
We do. We have a Nevada royalty portfolio. This holds 15 different projects in Nevada that largely come from the Lyle Campbell estate. Lyle Campbell was a prominent early day Nevada prospector in the 1960s and 70s. Most of these come from his estate. 2 of them are leased out to Barrick. One on a portion of the Bald Mountain mine where we have a 4% gross royalty. That'll be looking at production in the next few years. We also have a 1% override on a 30 square mile area, a very large region between the old Alligator Ridge mine and the Bald Mountain mine. It covers various deposits such as Poker Flats, Yankee, Bandage, Casino, a number of projects that Barrick has recently made descriptive analysis of in the Elko Free Press, which is a publication out of Elko, Nevada, where they discuss their accelerated production plans, which are actually as soon as the next 14 to 18 months in some cases. So we're looking at quite a bit of revenue increase from that.
Okay.
And 2 of the other projects are held by Midway Gold, who have announced production plans on the Pan deposit, which is over a 1 million ounce deposit, where once again we have a 4% gross royalty.
Okay.
So it's a very important part of our company, and it really provides a very unique foundation to our company.
Yes.
Most companies are 1 or 2 projects going forward and have a very limited ability to secure project financing when they do find something. And by virtue of the depth of the company, I think we have a very envious profile in that regard.
That's good. So developing is always expensive. What is the financial picture like?
Well, right now the company has about $8 million in cash and equivalents. That's with an asterisk because we're in the midst of a financing which will deliver something on the order of $15 million to the company's treasury, which will be sufficient to see us through our exploration program this year, and of course maintain our G&A and corporate overhead. All of the CapEx will be done out of non-equity sources. It will be done out of metal streams or off-takes or civil debt instruments. It will not be done on the shareholders' back.
Oh, okay. So the shareholders are not diluting.
They won't be diluted in that regard. Obviously, there's some dilution as you finance through exploration, but with less than a year payback period on a very, very modest, in fact, very low capex, there's just no point to do it out of equity.
Yeah. Okay.
And as a large shareholder that bought and paid for my stock in the market, I'm keenly sensitive and aware of dilution.
Yeah. Is the investment community paying attention yet?
A bit of it. We're just now starting to make some inroads. Quite frankly, we haven't been very aggressive in terms of trying to promote the company because we spent 3 years building the company. And I find it difficult to go out and tell a very good story when you're still building the story.
Yeah.
In the last 6 months, the story has really come together where we actually can see production visibility. We have a pipeline of projects. The royalties are getting close to producing. And now is the time that we're actually just starting to get out and really, I mean, we've done some promotion, but very, very little in true corporate sense. So we'll be doing a lot more of that going forward now that we actually have something that's coming to fruition.
Yeah. So in closing, why should a potential investor invest in your company?
Well, I think there are a number of reasons. We have proven management. Like I say, the board of directors is largely intact from when we took a company from $2 million to $1.8 billion in 30 months in the uranium industry. Have been to the New York Stock Exchange with a Vancouver company, which not too many have. And quite frankly, the quality of the assets as well. The Yukon is unparalleled in terms of a first world jurisdiction, in terms of government backing, in terms of ease of permitting, in terms of land tenure, security of ownership, and perhaps just as importantly, the mineral endowment. The mineral endowment in the Yukon is second to none, in my opinion. It has really been in a hiatus for 100 years since the famous Klondike gold rush until just the last few years, largely due to government issues which have now been resolved. And I view it as a place to, we have the commanding land position there, we have the commanding position in terms of projects that are road accessible, and near-term low-cost production visibility. So when you put all that together with the safety of the royalty portfolio, I think it's a compelling choice.
Okay, thank you very much. Thank you very much for the interview.